Well, good morning and welcome from London to the launch of the Global Green Finance Index number 11. Here today with me, Michael Mainelli. I'm one of the directors of Yen Group, and it really is a delight to be able to present the various three indices that we produce: the Global Green Finance Index, the Global Financial Centers Index, and the Smart Centers Index. And I'm here with Yen's CEO and Head of Indices, Mike Wardle. Now, it's an interesting index this year for a variety of reasons. It was this 6 months. I'll come back to that in a moment. But we are delighted to have the sponsorship of Abu Dhabi Global Market. ADGM, as you may be aware, came in as a sponsor last year, showing their immense commitment to the green finance agenda, not least in the fact that they are running COP28 this year in the Emirates in November. Now, I've got a few things I'd like to point out towards the end, some of our observations on the index, but the agenda today is fairly straightforward. I'll be chatting to you, I'll be getting out of your way as quickly as possible. Mike Wardle will be presenting the index itself from 9:05 to 9:20. And then we have time, 10, 15 minutes or so, for comments, questions, observations. We are always interested in what the audience thinks, not least because it's you who produces the results. This index, as Mike will explain briefly, is compiled on an instrumental factor basis. So it's the combination of thousands of people around the world answering the questionnaire combined with the instrumental factors that do it. We as Yen merely run the engine. We don't compile the index in the sense of putting weightings or anything. Those weightings are produced using the methodology we have by you, the community out there, assessing how you feel these financial centers are doing. When we began this index, it was originally done with MAVA. MAVA was the foundation that helped in many ways create WWF. MAVA itself folded up last year. It said that climate change was so imminent and so much needed to be done that sitting on its money was not a good idea, and it dispersed the remainder of its cash at that time. But we do owe a sort of posthumous thanks to MAVA for getting this going, and we are delighted that Abu Dhabi have seen the value in this and have stepped in to keep it moving. When we do get to the questions, comments, and answers, you should please use the GoToWebinar facility. Mike and I are not on email. We're not watching our WhatsApps, and we're not taking text messages or anything. We're here with you. Secondly, to the obvious questions, yes, this is being recorded. And also, yes, the slides are available. But more importantly, in the chat room, you'll find the report itself, which gives you actually all of the detail that you need. And on the website, you will find analytical tools to help you explore the data. And for those of you who are FS Club members, please just log into the members area where you'll find even more tools there to help you explore things. So I believe at this point, it's time to reveal the results. So Mike, the floor is now yours.
Well, thank you very much, Michael. Many of you will know me. I'm the CEO and Head of Indices for Yen, but enough about me, as they say. So the Global Green Finance Index, as Michael said, we launched that a few years ago in 2018. And one of the things to note is that when we launched the index in GGFI 1, we included 47 financial centers. We're now tracking 86 centers across the world for their green finance offerings. And the GGFI is set out with the intention to encourage financial centers to develop and enhance the range and depth of their green finance offering, to showcase best practice, and to foster a race to the top. We very much believe here at Yen in collaboration between financial centers, and learning from each other is one way to move the agenda forward. Michael mentioned that the GGFI is a factor assessment index. This means we take two different data sets. First of all, instrumental factors, which are a whole series of quantitative measures, 150 different measures in this edition of the index. And secondly, assessments given by finance professionals across the world in response to the GGFI survey. and we use machine learning tool to look for relationships between those two sets of data, the survey assessments and the instrumental factors, to create the index. And it's very much, as Michael said, driven by the views of those working in the field. And so who are those people who respond to our survey? Well, first of all, you'll see from the sectoral analysis, there's really quite wide range of different sectors of finance who get involved in the market. And it's good to see that range of sectors coming in and giving their views. Secondly, by region, the two largest regions in terms of response are Asia Pacific and Western Europe, but we do have representatives from other regions of the world, but maybe shows both the interest shown in this area in those two regions, but also the engagement in green finance generally. So the headline results for GGFI 11. First of all, London did hold on to its first position in the index. New York has moved up one place to move into second place, and New York's improvement has been quite marked over the last few editions of the index. Washington moved into the top 10, replacing Sydney in that group. And really interestingly, I think Western European centres take 6 of the top 10 places, with US centres taking the other 4 top 10 places in the index in GGFI 11. And that's not to say that other parts of the world are not doing good things. Asia Pacific are certainly coming up, but in terms of the top 10, currently it is Western European and US centres which are taking centre stage. But the margins separating centres at the top of the index continue to be very tight. Among the top 10 centres, the spread of rating is only 31 out of 1,000 points. That's slightly narrower than even in GGFI 10, where it's 42 points. So really competition is fierce to come out on top. And really what we're looking at in the index is not so much the absolute ranking, but the range of the ranking that different centres achieve. The next big message, I think, from this edition of the index is that confidence in green finance does appear to be strong. All centres in the index improved their rating in GGFI 11, and the average rating was up just over 10% compared with GGFI 10. So a really good improvement in the ratings that people have been given to financial centres. Finally, the number of centres in the index has gone up to 86. We now have Lagos and Kigali in the index, and it's good to see more African centres joining in the green finance crusade. So just have a look at the top 20 centres. As I mentioned, the key here in the top 10 is the prominence of Western European and US centres. But just outside the top 10, we have Singapore, Sydney at 13, Seoul, and Shanghai, Wellington, all doing well. And this is, I think, evidence that Asia Pacific centres are working to move themselves into the green finance area and are continuing to improve. And we track in the GGFI 2 different dimensions. One is the depth of green finance. The other is the quality of green finance taking place in that centre. And you'll see there's some subtle differences in the rankings looking at each of those measures. So for example, while London comes top of the index, it also ranks first for the quality of green finance in the centre, but it's pipped to the post in terms of the depth of green finance by New York. And so we see some interesting variations in the index in terms of quality and depth. And it's a real message, I think, for financial centres to be looking at where they sit on both of those dimensions. And just looking at the relationship between depth and quality, we can see here the correlation between the two dimensions. And we'll see that some centres are clearly stronger in quality than depth. Some have more depth than quality. And so London is just on the quality side of the line, New York is on the depth side of the line. Places like Astana seem to be doing very well on quality. Places like Oslo and Luxembourg have depth of green finance. So tracking both of those dimensions we think is important so that financial centres and the market understand where centres' strengths lie. We do various analyses of the data, and one of the things we do is produce sub-indices ranked by instrumental factor groups. So we take the quantitative measures, the instrumental factors, and group them into 4 different areas: sustainability, business, human capital, and infrastructure. And then we run the model using just the quantitative measures that relate to those different areas. And you'll see again that on this basis, there's some variation in the ranking of centres. London and New York take the top 2 places in all of these measures. Stockholm does very well across the first 3, is a bit lower when you look at the infrastructure measures. And again, this is an interesting analysis for financial centres for looking at where their relative strengths lie in relation to others. For example, Zurich scores very well on business. Washington scores less well on human capital. So these were areas which might be pointers for centres who are trying to develop their green finance. We also take a look at ranking the centres by industry sector. So we take people working in particular aspects of finance, whether in capital markets, investments, professionals, and again produce sub-indices which rate the centres by industry sector. And you'll see here a bit more variation that for those dealing with policy and regulatory, London comes top, but Singapore scores very highly. In the knowledge area, San Francisco comes up to 3rd. Edinburgh scores very highly in 10th position. And so again, we're looking at how different centres are seen by different types of professional working in the green finance area. I'm going to take a look at each of the regions of the world very briefly. First of all, Western Europe, we have a number of centres from Western Europe listed in the index. London, Stockholm, Geneva, Luxembourg, Amsterdam, all performing very highly, and with Copenhagen, they are the 6 centres that feature in the top 10. But other centres across Europe continue to perform well, and maybe just pick out Edinburgh has risen 8 places in the index in this edition. Madrid has risen 9 places, Hamburg 6 places, Glasgow 7. So there's movement in the index, and we'll continue to track the movement in centres across time. In the Middle East and Africa, Dubai and Abu Dhabi lead the ranking in this region, and just noting that they are now only 1 rank position away from each other, which is just shows, I think, the depth of commitment in the Emirates to green finance. Casablanca as the 3rd place in the region, the leading African centre, and has been committed to its green finance development for some years now. As I mentioned, Lagos and Kigali have entered the index, and African centres, I think, will continue to see improvement as time goes forward. Looking at Asia Pacific centres, Singapore takes a leading place, along with Sydney, Seoul, Wellington and Shanghai. All those feature in the top 20. But other centres in the region are up there as well. But there has been a bit of a drop-off in the rankings of Asia Pacific centres in this edition. I always say to financial centres not to take one edition of the index to heart, but actually look at the trend over time, and we'll see how that pans out in future editions. North America, as I said, US centres have been performing very well in the index, with 4 now in the top 10. I should mention Chicago, Montreal and Toronto, all of which, and Calgary, all of which are up several places in this edition. And it's good to see Canadian centres perhaps featuring a bit more strongly, and challenging the US centres in the GGFI. In Eastern Europe and Central Asia, Astana is the clear lead in the region. It's up 2 places to 52nd, and takes a clear leading position in Eastern Europe and Central Asia. Just say that Warsaw, Istanbul also moving up the rankings. In Latin America and the Caribbean, Rio takes the top place in this edition of the index, Mexico City has dropped back a bit, having been the leading center last time. But generally, most centers in the region have fallen back just a little in the rankings in this edition of the index. So that's a brief overview of the results from GGFI 11. As Michael said, the report's available to download, much more detail there. But I'm going to hand over now to Michael for some further observations and comments on the results.
Well, thank you, Mike. The first observation I might make is to have a quick look at the cover. In tune with the increasing fad, we have in fact constructed this cover using DALL-E, one of the AI entities that ChatGPT does. So just thought I'd draw your attention to that. We did the same in the Global Financial Centers Index, and we will do it again in the Smart Centers Index. And then I think we might go back to a more traditional way of doing things. But it was interesting to see that it is a very much a changing world out there, not just in financial center terms, but also in cover terms. Anyway, this first slide here gives you a good feel of the leading financial centers in contrast with the financial center competitiveness as measured by the Global Financial Centers Index. Now, why do we do that? Well, as you can see here, we've tried, it's a little difficult in some of this data visualization, but we've attempted to give you a flavor for where somebody's doing quite well in the financial center index, but isn't doing so well across depth, quality, or the overall Global Green Finance Index. So where you see a lot of red, and I pick out here Hong Kong, Shenzhen, Beijing, and Frankfurt, you can see that they're doing quite well as a financial center in our main index, but aren't doing so well in the Green Finance Index. To what do we attribute that? Well, to be honest, we attribute it to a lack of emphasis on this. Mike, if you don't mind just pulling that up in a larger format, please. What we see here is that we've got the ability to differentiate between them. However, I would point out that in previous editions, New York, for example, was doing very poorly and was very red. So centers can change quite rapidly. In New York's case, it's been just 5 years since it went from being seen not to be very good to being seen to be quite good and up there very much with London. Mike, again, it's flipped back. And one of the things that we're catching on this is that the indices, the changes are much more rapid than you think. And in the case of New York, that's clearly also been supplemented by the Biden administration with the Inflation Reduction Act and I'm trying to remember the other one, the Building Back Better Act. So they are showing an intense interest in this in America for the first time. And we preserve some hopes that over perhaps the next half a decade, America might come out with a credible emissions trading scheme, which I think leads me on to this next slide here, which is the growth in carbon trading. Now, in the carbon trading space, we asked respondents to assess the proportion of global emissions that they thought would be covered. To give you a flavor, we did help them. In the question, we indicated that emissions trading was already covering 23% of global emissions. And I think this is a point that is very often missed by people in the NGO and the environmental community, and not so much by people in the financial community. Just to give you a flavor, I believe the scale of carbon emissions credits each year is now in the order of about $760 billion. The voluntary carbon market, where you see tremendous amounts, people strutting on stage talking about their plans to do something, is actually running at only at about 2 billion a year, and that's after about 30 years. The emissions trading schemes began in operation in April 2005 with the European ETS, and so you can see over approximately 18 years that what you might call the more traditional, conventional hard market is far, far away the bigger. Now that might be seen as slightly unfair. At the moment, voluntary carbon market prices are fluctuating, but they're quite low. They're typically about $2 to $5 a ton, whereas on the main market, you're looking at approximately $80 a ton. Obviously, all these these prices fluctuate. So you could say that the 2 billion, if it was priced properly, would be closer to 80 billion, but that's still a long way from 760 billion. So that was the first thing. Now, the interesting thing to us was that nearly 60% of the respondents considered that we'd be up to about 30% of emissions within carbon pricing schemes by 2030. And this is with most participants not believing that either India or America, which would be the two major blocks to come into that, are coming in anytime soon. I think if we were to look at either of those nations coming in, then we begin to see that, in fact, traditional carbon credit emissions trading and the idea that it will be going to zero permits being issued each year by 2050 could become a significant factor in saving the world. In the case of Europe, we've seen that already in the 18 years that the scheme's been in, and despite a first almost lost decade until 2015, 2016, due to governments issuing far too many permits, it is quite a simple system. If you want to make the target, don't issue too many permits. What we've seen though is in the last 8 years, this has really bit and has led to genuine reductions. Now, if we could just turn on to a final slide with some thoughts on the carbon transition. We have a supplement in the report, and we would genuinely appreciate a lot more feedback on the supplements. We do these supplements each year to kind of dive in. These are typically done with one of our colleagues, Simon Mills, who works with Mike and me on this. And it's a great look at things. We've had a good look at the carbon transition, though, and this supplement pulls out for you what is quite a complicated area. It seems to become an area for specialists who talk about it, and the jargon is quite replete. But what it broadly says is there are two big gaps. The gap of implementation that we've achieved, that we've set some goals, for example, Paris in 2015, but we really don't seem to be meeting them. The second thing is about ambition. Even if we achieve those goals, is it going to be significant enough to make a difference? And it's true that these two gaps are genuine and real. And the first gap that we want, I think, to complete is the implementation. There's no point in setting goals if people aren't going to achieve them. We then worry about stretching those goals a bit more. No point in having further stretch goals if you're not going to do anything about them anyway. Now, those tools and techniques that we were exploring in the supplement included carbon trading, carbon accounting, and of course our favorite policy performance bonds. And again, a reminder that last year, two sovereigns, Chile and Uruguay, issued policy performance bonds or sovereign sustainability linked bonds. And in the case of Chile, it was for 2 billion. And in the case of Uruguay, it was for 1.5 billion. So that's 3.5 billion in total. And just a few minutes ago, I said that the entire voluntary carbon market was 2.1 billion. So this market is huge and important, and also reinforces the traditional markets, those larger 760 billion. We would like to see many more governments proving their genuine commitment in financial terms as opposed to in rhetoric terms. And now, what about financial centers? Well, clearly financial centers are part of the solution. And as the index has shown over the 5 years it's been running, they are moving, and they're moving at different rates, but all moving upwards. And this index is characterized by a significant jump, as Mike mentioned, across virtually all centers. So I believe that the public believe it. I believe that people in the sector believe it. Professionals believe it. We are moving down this road. We are showing progress. Perhaps there's an implementation gap. Perhaps there's an ambition gap. But financial centers are really starting to pull their weight. I also believe some of this is also due to American leadership recently in the administration, because I think that has given a global glow that we all have to go in this way. Although that hardly makes America a saint, it's certainly at least starting to pull its weight. We would encourage two further things in the United States, one being the formation of a proper carbon emissions trading scheme, and the second would be that America issues a policy performance bond. But to be frank, I'm not holding my breath. So, and then this final slide, just to give you a kind of flavor about the key messages, because this is a bit of a long session today. So what would we say? Well, there is increased interest in carbon pricing, which is a wider aspect of carbon emissions trading, and much more emissions trading schemes could make a huge answer and be far more, actually already are far more important than ESG on the climate change issues. ESG is a wider area involving forestry and water. Policy performance bonds focusing on outcome delivery rather than use of proceeds are gaining traction, and those discussions are growing with various jurisdictions. ZN has been leading on this. I think in the last week alone, we've had discussions with 7 or 8 governments on issuing these. U.S. centers have caught up. The very fact that New York is pipping London is, I think, quite a sign. But let's be frank, the Asia Pacific centers are getting it and have gotten it. And I can genuinely vouch this week, having had chats with 2 Asian centers, that they are really, really committed to this. And these will turn up in the numbers in the next 6 months or 12 months, depending. Finally, at the end of the day, centers which perform well in this particular index are committed to environmental improvements across the economy as well as in finance. And they do and are developing a depth of financial services skills. That said, as I indicated in the earlier slide, you can still run a sensible financial center economically without green at the moment, but it is getting harder and harder. And you saw that top level are across the board, and across the board means all the other areas of business, environment, regulatory, blah, 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 and green. Mike, I believe that concludes my comments, and I think we can turn to any of the questions that people have or chats. Just before we get going, Mike, personally, you've been out run 11 of these, which is quite a bit. What's the biggest surprise you've seen over all 11?
I think the surprising, I think, comes from that analysis we put up on screen, showing the leading financial centres in the Global Financial Centres Index compared with the centres in the GGFI. I think I would have expected some of the leading centres, maybe Hong Kong and so on, to be performing better in the GGFI than they currently are, because we know they have depth and strength of finance and talent and skills, but for some reason they're not yet showing their green finance strength in the way that we'd expect. I think the other thing which is maybe surprising is the way in which quite small financial centres can achieve strength in green finance. So we see places like Stockholm and Copenhagen, Amsterdam, Luxembourg performing really well in the Green Finance Index, and it shows that maybe there is a space in green for specialism and for centres really putting effort into green to show the way and show some leadership. And in talking to financial centres, that theme of collaboration, talking to others, learning from other financial centres is one that comes up again and again. And there may be some lessons for more established centres to learn from smaller, less established centres on the green finance area.
I have a question from Alexander. I believe he's based in Central Asia. Alexander is curious. You've got a number of places like Almaty, but also the British Virgin Islands, Prague, and Bahrain, where green finance quality is rated not too badly, but well ahead of depth. Do you feel these centres have a genuine chance of competing?
I think they do. I think that as on the key messages slide you put up, the centres that do well have a commitment across the entire economy. I think that there is some difficulty for centres, particularly in maybe oil-rich economies, to demonstrate depth of green finance. That will change over time as the carbon transition takes place. And it is more difficult, I think, for smaller centres, maybe the offshore and island centres, to demonstrate depth of green finance, because they are known for a variety of other services that they provide. So I think that there is that sense that in green finance it is difficult to perform very highly on the depth of green finance when your economy may be based around fossil fuels, but therefore the quality measure becomes really important, because the green finance you are doing has to be of really high quality, and you've got to have really good people working in the environment.
I've got a few more questions here, Mike, but just a reminder to the audience that we'll be wrapping up in about 5 or 10 minutes. So if you want to put a question in the chat room, please do. Mike, this question is from Elizabeth in London. She's curious, how can centers actually work together? Aren't they really just competing?
Well, as I say, I talk to financial centres a lot, and there's a variety of initiatives in place, particularly around green finance, where centres come together to discuss priorities, to discuss strategy, to discuss ways forward. I'm thinking particularly of the United Nations Financial Centres for Sustainability Group, our own network of financial centres called the Vantage Financial Centres Network, and the World Alliance of International Financial Centres. And all of these groups bring together financial centres to talk about the key strategic challenges, where things are moving, and how financial centres are addressing the challenges that face them. We produced last year with Dubai International Financial Centre and the World Alliance of International Financial Centres a paper on the future of financial centres. And one of the key themes of that, which was drawn from discussion with centres, was that competition goes alongside collaboration. That in order to compete, you need to be collaborating, ensuring there are good links between financial centres, both at a regulatory level, but also at an ideas exchange level. And financial centres certainly seem to have grasped this message, that they compete best by collaborating with each other and understanding the nature of the global challenges that we all face. So I'm very hopeful the financial centres will continue to be in that space and continue to be looking to ensure that everybody improves over time, and the competition element is less important than collaboration.
Bob in the Channel Islands is curious about the centres that aren't in the index. We have a number of centres in GFCI that aren't in GGFI. Do you have any comments on why those centres are not in GGFI and which ones are most likely to come in?
Mm-hmm. It's really about visibility. So the way that the methodology works is that we bring into the index those centres where in the GGFI survey sufficient people around the world have rated those centres for the depth and quality of their green finance, and we need some critical mass of data in order to be able to run the analysis. So the centres which are in the Global Financial Centres Index, which don't feature in the Global Green Finance Index, haven't yet got enough visibility amongst finance professionals across the world for their green finance to allow for people to assess the offering they make. So it really is, I think, a matter of those centres that want to progress on green finance, making a noise about what they're doing on green finance, making sure that people know that they're active in the field, so that when people consider the Global Green Finance Index survey, they pick that centre along with others to rate the quality and depth of what they're doing. So I think it really is, it's marketing, it's promotion, but it's really talking about what's happening in centres. I'm sure there are centres who are doing good work on green finance that we're not currently tracking, but they will come into the mix over time.
Mike, an old friend of ours, Miss Zhong in Tianjin, is curious, what advice do you have for centres that want to rise rapidly in the GGFI as opposed to the GFCI?
Okay, I think really the answer here is to have really well-defined strategy for green finance, and we see the centres that are moving up, and New York may be a very good example. They sort of trust the nettle, as it were, and have a strategic view in place as to how green finance is developed. It helps to have support from government and policymakers to ensure that the regulatory and the business environment is supportive of the goals of sustainability, green finance, and certainly a mix of a clear strategy as to which sectors you're going to focus on, how you're going to move towards more green finance in that sector, and government and regulatory support is the way forward, I think.
And the final question I have here, unless the audience kicks in with one more, is from Mo down in Dubai. He is curious, given that they're going to be hosting COP28 at the UAE, any thoughts on what the COP28 might do to the next edition of the index?
I think the challenge for the next COP, as it was indeed in Glasgow, as it was in Egypt, is to continue to translate ambition into action. And in terms of green finance, one of the things we pick out in the supplement in this edition of the index is the current gap on carbon transition. And I think that there's a real opportunity here to grasp that again, and to ensure that one of the outcomes of COP28 is further commitments to transition funding, to assisting all economies to make the transition. And we are seeing huge shifts in oil-producing states in the Gulf, including the Emirates, and in other parts of the world, but particularly in the Gulf, to be serious about moving to alternative energy sources, and the phasing out over time of existing fossil fuel reliance. And what I'd encourage, I think, is those who are looking ahead towards COP28 is to focus on even more on that transition and the transition goals, and to lead by example by demonstrating that those economies that are making progress are really making progress.
We actually have a final question. This is from Abel in London. Abel's with a major bank, major central bank. But just out of curiosity, Mike, from your perspective, what specifically might Lagos be able to do about GGFI?
Okay. So I think for many centres in emerging markets, then the gaps, as it were, are probably to do with the depth of green finance in the market. Traditional finance is very strong in Nigeria. Green finance doesn't have yet as much of the market as might need to move up in the GGFI. And secondly, a really laser focus on developing skills, because I think the thing that sort of marks out those centres which are scored very highly for quality in particular, is they have real depth of skill and talent in the workforce, focus on green finance, qualified on green finance, and really able to take decisions about risk, about investment, about products, which are based on a deep understanding of how that relates to the climate change and to sustainability.
Wonderful. And I might add to that not just Lagos, but across Africa, most of the credible voluntary carbon market things that I've seen have been in Africa, where there can be a real change made. We then, of course, hit the African governance issues, but nevertheless, I must say, from a scientific point of view, most of those are the credible ones. Anyway, we've come to the end of our questions. I just wanted to turn to a final slide, and I've got some rounds of thanks to do. But what I'd like to point out is that we do, as always, normally just say go to the website and have a look. But for this audience, there are two, I think, particularly interesting things. One, next Thursday, next week, we have the future of green hydrogen. And on Tuesday, the 2nd of May, we're going to be looking at how we harness markets to deliver Paris. So these are both important. But a special word, if I might, on hydrogen. This is a particularly interesting, Mike, it's gone down again. This is a particularly interesting session next week. It's what we call a BizTech Huawei chat. We have experts dialing in from Asia, in particular China. There will be simultaneous translation, but this is a genuine opportunity to get a feel for what's going on around the world. I've spent about 9 out of 14 weeks out of the country in Japan, Abu Dhabi, Channel Islands, Germany, Austria, Italy, blah, 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 blah. But for the 15% or so of our audience who are British, honestly, the rhetoric we hear in Britain about hydrogen is much more subdued than the enthusiasm that you will find all around the world. And I think this could be a particularly good session. We do also have people presenting from Britain and in particular also Germany, which is coming out to be a rising hydrogen center. So at the risk of promoting one of our many, many events too much, nevertheless, I think this for you who are in the audience might be of particular interest. Well, by way of thanks, if I may, I would like to thank you, the audience, for listening and hope to see you at future FS Club chats. I would like to thank Abu Dhabi Global Market for picking up the mantle and the sponsorship of this so wonderfully. We really, really appreciate it. And it is definitely carrying on the legacy of the MAVA Foundation. And finally, Mike, I'd like to thank you and the team at CN, both for preparing all the materials, preparing the presentation, and not least, Mike presenting the results today. And as ever, we here at CN look forward to your thoughts, so please do fill out the index. It's a very easy index to fill out if you're working in this space. And we look forward to the results of Global Green Finance Index 12 in October. And I might also just point to the bottom left, if you're interested as well in our Smart Centers Index, which looks at how centers around the world are capably using technology to develop their economies. That'll be on the 25th of May, so effectively another 5 weeks from today. Thank you very much for joining us.